Okay, let me just take you up on that part.
Yeah.
We know that the real GDP grew by 6.54% in the second quarter of this year and 6.21% in the first quarter.
Okay. Yeah.
That's fair, relatively fair in terms
Well,
of the
it is.
situation that we find ourselves in at the moment. But going by what we actually have now on ground, interest rates being the way they are, and seeming the status quo on the other variables that also have positively affected the real GDP. Are we going to see these numbers change? And if we're going to see these numbers change, where are they going to go? Where is the pendulum going to swing, negative or in the positive side?
Well, from our own analysis, in our quarter four analysis in terms of where investment is going, you can see that even the growth was driven by the service sector, mainly. So you still see a lot of capacity that is still, we can build a lot of capacity in the real sector, and the GDP can even grow bigger if we actually do things and provide incentives to motivate the real sector. So it may go up because we still have a lot of interest. We have asked questions about where people may likely take investments to, and we still see a lot of people looking at the service sector. It goes a long way to tell us that people are not so confident about putting their investment in the real sector because of the volatility of the situation. So people want a place where they can get quick return on their investment. And that is why we have a lot of this portfolio investment, people going into the banking sector, to the insurance, where it is easy to recoup the investment.
Well, Mr. Idahosa, considering that the CBN has, begun to put its eye firmly now on the MSMEs with the disbursement of 220 billion naira intervention fund, don't you think that investors will begin to think more favorably or become more favorably disposed to investing in MSMEs?
Clearly, that's the interest has always been there, but you didn't have a catalyst to encourage people. Since the CBN has put their money on the table, you are going to see a lot of institutions, local and foreign, that will be going into that sector, because part of what CBN funds will do is to strengthen the institutions, the microfinance banks, the microcredit institutions, who will be the lending agencies. Those institutions did not have the level of funding they needed to kickstart lending. You need to lend for the let's say the first set of SMEs. They do well, they bring money back to the banks as deposits, they use the banking services, the banks make more money, and they have a larger pool to invest. With that, 220 billion is very small in the context of what we need to do, but it's going to stimulate and attract counterpart funding. You have international institutions, you have local institutions who are ready to support the SME. Some are already doing that, the various foundations owned by some large companies. You are going to see a lot more, and that is where you really expect the money to stimulate growth. You can't get much money from commercial lending now to stimulate growth. At 22% average lending rates, it's only the large corporations that can borrow from the banks. So the SMEs are going to depend a lot on long-term funding from agencies like the CBN and development finance institutions. And that is where essentially we need to make a lot of activity. We need to attract institutions that have those kind of funding. Insurance companies, foundations, pension funds, and similar organizations, joint venture capital within and outside the country. We need to look at essentially the capital market, particularly the medium to long-term capital market. People who have funds and are willing to invest, because Nigeria has very, very, very strong long-term prospects. We have short-term issues with security and power, but long-term, once you look beyond 3 years in Nigeria, certainly power is going to improve. The security situation is very likely to improve. So long-term, every investor that is looking beyond 2 to 3 years sees a very, very positive Nigeria. So those kind of people can be attracted to funding SMEs in a corporate manner like the funds that the CBN is providing.
Mr. Alimi,
Yes.
you want to add some
Yes,
more?
I just want to, what I just want to add, it's good, it's not enough, but it's a way to go, it's a way to start. And the announcement has been made, and we just want to implore the CBN and to please expedite action on making the fund available, because it goes beyond just announcing. We must now make it available, have a transparent way in making sure the fund actually gets to the intended. I'm very happy that we have shifted from what you used to call SME and now to MSME, which means some much, much smaller investors, the micro, can also get funds to support their businesses.
So let's look at Mr. Emefiele's philosophy. He's stayed over 100 days now in office. That's about 112 days or thereabout in office. But what are your thoughts? Would you say he's moving in the right direction? It's still early days yet, but then he's taking his first wobbly steps, if we would like to put it that way. So what are your thoughts, Mr. Idahosa?
Well, I think for 100 days, yes, you will expect some very cautious movements. He's come to state his broad policy framework or vision to pursue growth, pursue employment, and try to retain the macroeconomic stability that previous administration has achieved. So that is the tough balancing act he has given himself. He wants to retain the macroeconomic stability that former administration achieved, and he wants to pursue growth and employment. The former administration made its choices very clear. They said they were focused on stability of the foreign exchange and the interest rates, and they were prepared to like keep quiet on the pursuit of growth and employment as a major strategic objective. So they made some token support for growth by the various intervention funds that they did, but beyond that, they didn't make any promise as to growth and employment. So what the new governor has tried to do in the last 100 days is to try and see if he can pursue this balanced platform of trying to do both. But clearly, in the 100 is showing that it's very difficult. And the theoretical framework for doing that also was also questioned by a lot of people as to how you can do both actually to achieve growth, achieve employment, increase employment aggressively, and still maintain your interest rates at 12% MPR and the level of cash reserve ratios you're asking for. So we will say that he's trying to do, he has set himself very, very tough standards and objectives. He hasn't really shown how he can do that balancing act successfully to keep inflation down, keep interest rates and foreign exchange rates about where they are now, and at the same time stimulate growth in a very aggressive manner, like you have the Fed doing with their stimulus packages. So he has to come out with a formula that will be quite interesting in the sense that he will be able to maintain the stability. What some observers expected was that he was going to be ready to risk something. That, for example, he was going to say, look, I'm going to start moving interest rates down. If it means inflation is going to shoot beyond 9%, I'm ready to pay a price to take a little bit of more inflation so that I can pursue growth and fast-track employment. But he doesn't seem to be willing to cross that step, that line of taking that risk. He still wants to try keep the 6 to 9% frame inflation target. Keep MPR shouldn't go more than 12%. Try and keep it 12% and start to bring it down. And then you want to fast-track employment. You want to fast-track massive growth. So he hasn't convinced anyone yet how he's going to be able to balance all those objectives.
Mr. Alimi, does the organized private sector feel the same way? Do they feel that Mr. Emefiele is moving in the right direction?
Well, we say he has been very cautious. It's been a cautious 3 months and a little more thereabout, especially in the monetary policy issue. I take something away from what he said when he was coming in. He actually promised he was going to reduce interest rates.
But that was after the elections, he said.
Well, after the election, but of course, like Mr. Idahosa said, we expected to see some bold steps, some bold moves, some courageous move in the sense of, okay, I looked at the minute of the last MPC meeting, and I find out that instead of, when you look at the voting pattern, some voted to retain, while others voted that it should even go up, which meant nobody was actually looking at even bringing it down. And I think the CBN governor was supposed to bring to bear his own plan on that committee, because if the committee is not getting any serious framework or plan from the CBN governor, how he thinks he can do the two together, they would not be confident enough to say, okay, bring it down. So I think it's been very cautious. I would say some of the move he made, we have to commend him. He removed the charge on deposit, which is commendable. At least it will serve as a stimulus for people to bring money into the system. And the launch of the 20, though these are started before he came in, at least he made sure it happened, the 220 billion MSME fund. So we are watching. I think 3 months is a very short period, but because he made some promises, we have to take him on those promises he made, and it's not happening yet.